Another week and another underperformance by the portfolio. Now, of course, this portfolio is only 2 weeks old or young, but right now, as you can see, we are underperforming the overall market. Now, of course, we've got here some positions that if things turn around, I do believe we are going to outperform the market by quite a lot. I did make a couple of changes, so as you can see, PayPal is still the biggest position in the portfolio. SoFi is now number 2. That's thanks to the big drop we've got during that week. I covered all of that on the channel. Number 3 is Tesla right now. Tesla, my timing there was not that perfect, but again, if it drops lower, fine by me. I tend this to be the biggest position of the portfolio going forward. Then we've got Google. Didn't do much, but right now it is performing as expected. Apple dropped a little bit, we're going to talk about that. Snowflake, I added a bit more this week, I'll explain during the video as well. Then the rest, I didn't really touch that much. Adobe, Alibaba, Intel, Palo Alto Networks. And the last 2 positions here are my 2 long-term bets. One is Appcelera and 2 is Rocket Lab. I'll also explain the moves in this video. Oh, and one last thing, we did sell out of our position in Coupang with a 4.18% gain. I said I don't know if I wanted to keep it or not. I took the gains and added the rest to these long-term bets here, Appcelera and Rocket Lab. So I'll start off with an explanation with regards to Apple. Apple started the week quite weak. So this came out, Apple's iPhone sales in China tumbled 24%. amid rising popularity of Huawei. Of course, we know Apple, the iPhone, is currently the bread and butter of that company. And when you hear these types of reports, doesn't really go well with the market. Of course, with everything else, the lawsuits in Europe, their fight with Epic Games, Fortnite maker Epic Games. I mean, things aren't really going Apple's way currently. Of course, all of that could change throughout the year. My expectations is that they're going to announce their next product lines and market those as AI products, AI iPhone, AI MacBook, iPad, smart devices, you name it. I think that will come out probably in the later part of this year. Next up, we have this long ongoing fight between Epic Games and Apple. So first, Apple did ban Epic Games developer account on the iPhone. Now, apparently, they are reinstating that account in Europe. It's a whole fight going on with regards to Apple's monopoly, Apple's App Store monopoly. Some people are still for that monopoly for one reason or another. I don't really understand that. Yes, Epic Game tried to open a back door, but overall, I think we're way past the fact that we're all sick and tired of having those duopolies. So one is Android, but with Android, you have so much more optionality. With iPhone, you basically can't do much other than buying stuff through the iPhone App Store. Previously, I mean, if you're old enough to remember, jailbreaking the iPhone, jailbreaking the iPod Touch, putting on Cydia, those were the days. So it says here that Apple this week had moved to terminate Epic's developer account, which it had planned to use to bring the Epic Games Store and hit game Fortnite to iOS devices in Europe. That brought a rush of action from the European Commission and EU Commissioner. Under the DMA, there is no room for threats by gatekeepers to silence developers. I have asked our services to look into Apple's termination of Epic's developer account as a matter of priority. Now, Apple has told us and committed to the European Commission that they will reinstate our developer account, Epic Games said. This sends a strong signal to developers that the European Commission will act swiftly to enforce the Digital Markets Act, DMA, and hold gatekeepers accountable. We are moving forward as planned to launch the Epic Games Store and bring Fortnite back to iOS in Europe. Onwards, because it's been years, I think, since you could play Fortnite on your phone. Of course, I don't really know who wants to play Fortnite on their phone, but then again, this is just a thing of principle. So that was the Apple part of the business, the still underperformance by Apple. I do still think that they will perform quite strongly in the years ahead just because of their brand, just because of the install base and the way they can monetize their users. Going forward, of course, probably more wearables, more services, AR, VR devices as well. Now that we know for sure there's not going to be an Apple car, that's a big plus. Focus on what you're good at. Moving on to Snowflake. So Snowflake, one positive thing here I want to mention first is that Snowflake director buys stock worth over $500,000. Now, Usually when they sell, it's always been talked about, but when they buy, suddenly nobody talks about that. There's only one reason to buy, plenty of reasons to sell. This is probably very bullish. Then, with regards to the stock's performance, why did the stock drop? Couple of reasons, well actually maybe just two reasons. One, the stock was already extremely expensive, and two, new CEO and so guidance was a bit conservative. Now if you think I'm making this up, no, here's a comment from their CFO. So talking about the guidance, he says here, with the new CEO coming on board, we have so many new products coming to GA that we're not going to forecast those until we start seeing a history of consumption. So I do think there is, call it conservatism, I call it prudent guidance, and we'll take it one quarter at a time. And we will really like to see Sridhar succeed as our new CEO. To me, this translates to new CEO, guidance is conservative to make the new CEO look better in the coming quarters. Now, that said, of course, the stock still not cheap, but the company is growing and growing quite fast. Reason enough for me to add a little bit more on that dip. Now, I know, some of you will say, oh, but why aren't you buying Palantir in your portfolio? You love Palantir, right? Yes, I do. But to me right now, it doesn't make sense to add Palantir currently right now at $26, $27, just way overbought. I'd rather watch the stock chill out a little bit to open a position. This is not me trying to time the market. This is just me not trying to throw money at things that have gone up extremely fast in the last couple of weeks. Then with regards to the likes of SoFi, Tesla, and Google, you already know my thoughts about that. I did a video about SoFi last week, PayPal on Sunday as well, Tesla, a weekly video, so you get to hear my thoughts on Tesla every week on Saturday, and a Google video came out on Monday as well, and I believe on Friday. So not have to re-explain myself here. I'm bullish for the long term on all of those companies. The stock right now is obviously having some weakness compared to the market, because for most of those companies, the market is still wanting to see what the business will do. Eventually, the business has to show the market that, well, it deserves a premium or it deserves to go up, right? We've seen that with plenty of companies, plenty of stocks that don't move much, right? Palantir is a perfect example. Palantir had extreme weakness. It was trading at $6, $7, $10, $11. But the moment it showed the market that suddenly everything is reaccelerating, that's when the market started to look at it. And of course, we've seen the results. I believe the same will happen with the likes of SoFi, PayPal, and Tesla, of course. It's in the league of their own with everything that's going on there. But Google, they need to show the market that, well, they're not a small AI startup. They're not going to get eaten up by all the others up and coming startups or AI products out there. I strongly believe they can prove their point. And besides that, the legacy, let's call it legacy Google business, is still extremely profitable and one of the best out there. As for Adobe, they're reporting earnings this week, so we'll cover that in the next video. And with regards to Palo Alto Network, we of course talked about CrowdStrike, their extremely strong quarter and guidance. So Palo Alto took a little bit of a hit because of that, because of their guidance, which was also weaker than expected, because of their move towards becoming a platform, which in my opinion is a good move. Right now, I've already opened a position after they reported earnings. Currently, I'm waiting to see where I can add another chunk to increase that position. Now, last two things to discuss in this video is obviously the new two long-term bets. I call it bets because both of those companies, in my opinion, are still in a state of a bet. It's either going to succeed and going to reward me handsomely, or it's going to, well, fail miserably. So first up is Rocket Lab. On Friday, I did a live stream with Vince. We talked about Rocket Lab for over an hour. In this video, of course, I'm not going to explain all of the Rocket Lab thesis in an hour, but just in short. So in short, Rocket Labs wants to be that one-stop shop for all your space needs, whether it's launching rockets, services, satellites, you name it. They do business with governments and the private sector. Analysts are saying that by 2030, the space economy, the overall space economy, could be worth over $1 trillion. And if you look at how small Rocket Lab is right now, I mean, there is massive opportunity. Of course, there are plenty of competitors out there. The biggest ones, obviously, SpaceX. Now, SpaceX, last time we talked about that, was valued at around $180 billion, which again could make sense because of all the attention that it's getting and because of how far ahead it is from the competition. SpaceX obviously has Starlink. Starlink, last time we checked, 2.3 million subscribers yearly. That means over $3 billion in revenue and growing quite fast. So you can maybe understand this high valuation. But if you look at Rocket Lab, market cap of under what, $3 billion or so, the opportunity to become a 10, 20 or whatever bagger is there, if of course they can make it. Because the next step for Rocket Lab is Neutron. Neutron is basically going to be the equivalent of SpaceX Falcon 9. You can understand how profitable that can be for them if they succeed. That's the thing, if they succeed. Building rockets is not cheap. Testing rockets, not cheap either, because we know that the first launch will be a failure. We know maybe the second launch as well. So the next step, the Neutron, is going to be key. Now, currently, the business right now is doing okay, I would say. This is the outlook for Q1. They're expecting sequential increase of 50% when it comes to revenue. They expect space system revenue of $60 to $65 million. GAAP gross margin between 24 to 26%, non-GAAP gross margin 29 to 31%, and as for adjusted EBITDA, a loss of $28 to $30 million. Now in 2024, Rocket Lab expects to launch the Electron rocket, which is the much smaller one, 22 times, which is quite a big deal because if we go back to what they said in Q3, they've long stated that they want to get to the target model for non-GAAP gross margin of around 50% that requires launching 24 times a year. So we're going to make significant progress towards that as we launch, as we kind of strive to hit that 22 number next year, which is now 2024. If you look at any given quarter, if we have again 6 launches in a quarter, that should be at or very close to our long-term 50% non-GAAP gross margin target. And I do believe that in each of the next coming quarter, on average, they're going to have 6 launches. Of course, if there is a crash, then everything becomes delayed. That's the thing with this industry. One crash can delay everything for the whole year. One crash can obviously scare away potential clients. Moving to this quarter, more specifically backlog, they ended Q4 with just over $1 billion of total backlog, with launch backlog of $248.3 million and space system backlog of $797.8 million. Very important to note here that the space system business is much larger than the launch one, and it's going to continue to be like that. And in the future, probably, most likely, services is what's going to push this company to higher highs, of course, depending on how successful Neutron is going to be. So relative to where we ended 2022, total backlog was up 108% or $542.5 million, thanks primarily to the $489 million base portion of December's $515 million SDA Beta award. For space system backlog, that was up $106 million year over year or $410.4 million, and again, thanks to that beta award. In our launch services business backlog was up over 213% on the back of multi-launch Electron deals with government and commercial partners, along with the strong HASTE bookings. Last thing here, they expect approximately 41% of the current backlog to be recognized as revenue within 12 months as they scale their work in Electron, HASTE, MDA, and other space system projects. So I would say that right now they're doing everything that they should be doing. But again, this is still a long-term bet because without the success of Neutron, this investment does not make sense. Yes, they can have some business with regards to Electron, with regards to HASTE, etc., etc. But if you want this to be a very, very successful investment, Neutron has to work. Progress is being made, but I do think that this year we're not really going to see a launch. That's just my opinion. And the first one will probably be a failure as well. You will never have a first successful launch right off the bat. Just my opinion. Of course, do share yours down in the comments below. Then, last company I want to talk about is another long-term bet, and that's Appcelera. We've talked about Appcelera once on the channel. That video also will be in the top right corner or maybe in the show notes below. Some of you have been asking for a comment on Appcelera. Maybe it's because of the fact that Peter Thiel has left the board, has resigned. I don't have any extra things to add to that. He left maybe for personal reasons. I don't know. We don't know the reasons, so I'm not going to speculate on that. But for those of you that don't know what Appcelera does, here's a super short description. Appcelera basically researches and develops human antibody. Basically, think of them as a super-powered search system for the immune system, looking for the best fighters, which are the antibodies, to defeat diseases. And because of the current structure of the business model, you will have highs and lows. We've had super highs during the pandemic period, and now we're getting to the super lows, which is why you're seeing now total revenue of $38 million compared to $485 million in fiscal year 2022. Huge difference here. But again, if it works out, if their new factories, if their new way of doing things works out, you can expect this to explode. Because look at what happened when things were going extremely well for them. And that's not even reaching their full potential. Right now, net loss was 51 cents per share, comparing to earnings of 56 or 50 cents diluted per share in 2022. Again, this is not even when they reach their full potential. And so in my opinion, again, this is a small long-term bet that I'm willing to take, because if it works out, well, it's going to work out quite well for me. And right now, the most important slide, in my opinion, every single quarter is this: continuing the portfolio growth. The cumulative number of partner-initiated program starts continues to grow. Cumulative numbers of molecules in the clinic continues to grow as well. That's all that I'm interested in right now. Of course, I'm also interested in the progress of the new manufacturing site. Manufacturing will be online in late 2025. Of course, this year is still going to be a year of huge investment, 2024, so don't expect to see anything meaningfully in 2024. But in 2025, this is the year that things start to get a bit better. They say themselves, 2024 is a year of still quite a lot of investment in the company for future growth. I don't want to drag this video too long, but just so you know, this is a company that is already working their partners with one of the biggest players in the health space. And so the more you work with those giants, the more you get positive results, the more we are going to see these types of results. The royalties, again, this is in 2022, royalties still the effects of the years prior. Right now, 2023 completely disappeared. In the future, I fully expect to see these green bars become bigger and bigger and bigger over the years. So to conclude, while the portfolio right now is obviously underperforming, again, this is just a portfolio that is 2 weeks long, I do think that the top positions of this portfolio will become bigger and bigger over time and will perform and outperform the market over a long-term period. Of course, some weeks I will not change anything. The others I might tweak here and there. Of course, I will provide weekly updates if there is anything to provide. But with the amount of companies that I currently have, I want to keep it at around 10 to 15 positions, with the top 5 being the majority of the portfolio. I do think that on a weekly basis, I will have some extra things to provide to you in these videos. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.